Good afternoon, everyone. My name is Luke Seufferlein. I'm the managing partner of Cal Capital Partners, and I want to thank you all, first of all, for being here. This is a great turnout, and I really appreciate you guys taking the time to come and listen to our presentation. I also want to thank Tom for giving us the opportunity to come and present to you, and to also thank him for all the hard work that he's done for the Seufferlein sales program. It's been really impressive to watch what he's been able to accomplish over the past few years, and I'm very excited to see where this goes. So thank you very much, Tom. All right, so who's graduating in a few weeks? Nice. That is awesome. Well, congratulations. That's obviously a very huge accomplishment. You should be very proud of yourself. One bit of unsolicited advice is just to make sure that you enjoy every moment of these last few weeks you have here, because as we all know, Chico is obviously a very, very special place, and you're going to miss it when it's gone. So enjoy it as much as possible, responsibly, please, but make sure that you enjoy it. So another question, show of hands, who here is interested in a career in real estate, or at the very least interested in investing in real estate at some point in their career? Wow, okay, cool. Well, I hope this presentation is beneficial for all of you. But from my experience through my career, when I've told people that I'm in real estate, most assume that I'm in residential real estate, that I'm buying and selling homes. And while that's a fantastic way of making a living in a career, my mom was in it for a number of years, for decades actually. A lot of people, especially younger people like yourselves, don't realize that residential real estate is really only half of the real estate industry. The other half being commercial real estate, which Chuck and myself have been fortunate enough to be a part of throughout our careers. So today I'm very excited to talk to you about the commercial real estate industry, and to also just show you some of the sales roles that are within the industry. So let's get going, huh? So the agenda for today, I'm going to talk to you, it's just what is commercial real estate, high level, right? Like what is it and why should you be interested? What are the sales careers within the industry? What does it take to succeed, and how to break into it as a young college student? And then I'm going to bring Chuck up, actually, and we're going to just do a panel discussion. So Tom, it's that with his part, it's going to be 45 minutes. And then lastly, like Tom mentioned, we're going to do a Q&A. So again, my name is Luke Seufferlein. I'm a managing partner at Cal Capital Partners. And we are an investment firm that focuses on investing in boutique commercial real estate in downtown markets, right? So all across the Bay Area. I have put up here 3 pictures of the latest acquisitions we've actually bought. And if you look at the top left, this is 300 Ellsworth. This is an office development in downtown San Mateo. It's 30,000 square feet with ground floor retail. Below that is 1089 Valencia, which is 9 apartments over 2 retail. And this is along the Valencia corridor in the Mission District of San Francisco. And then on the right is our latest acquisition, which is 855 Valencia, down the street from the other building on the Valencia corridor. And that's 4 apartments over retail. I think I might have said that already. But prior to founding Cal Capital Partners in 2022, I was formerly the director and partner at Rubicon Point Partners, which is a commercial real estate private equity firm focused on value-add office deals on an institutional basis along the West Coast. So my territory specifically was Seattle, Silicon Valley, and San Francisco. And before that, I started my career as a broker. I'll describe what that is here in a minute, doing investment sales and leasing at Newmark in the Silicon Valley office. Like Tom mentioned, I graduated Chico in 2009 with a business marketing degree, and I have my MBA from Pepperdine University. I live in Lafayette, which is in the East Bay, with my wife and my 3 kids. So that's a bit about me and about my experience. All right, so high level, what is commercial real estate? Commercial real estate, in my opinion, is kind of broken down into 2 components. These are physical assets where you work, live, and play. I mean, that's kind of the first key point there. The second is that these are cash flowing investments. That's what really differentiates commercial real estate from residential real estate. And they really operate as standalone businesses. They have their own accounting and they have their own building ecosystem, which I'll show you here in a minute. The commercial real estate is really broken down into 4 main categories. There are a couple others not really worth talking about right now for the sake of this conversation. I just want to keep it to these 4 main sectors, but excuse me. I knew I was going to do that. The first being office, and then you have retail, industrial, and apartments or multifamily. Starting with office, you could think of this as anything from Google's campus down in Mountain View, their massive campus, to the Salesforce Tower, which is actually where I office out of. It's a multi-tenant building in downtown San Francisco. It could be anything from your medical office, where you go to the dentist or the doctor, and it could be also something like biotech. Going down to retail, think of anything on Main Street or Broad Street that has restaurants, shops, anything like that. That is considered retail. So it could just be one individual space, but it could also be something as big as a mall. And then anything in between, like a strip center that has a 7-Eleven or anything that you would see from that perspective. The third being industrial. You could think of these as kind of those really big, ugly buildings you see along the freeway. They're usually massive, and these are used typically for distribution, storage, and for manufacturing. And lastly, multifamily, which is the same thing as apartments, is pretty self-explanatory. The one caveat being that anything above 4 units is considered an apartment building. Anything less than that is really considered like a duplex or a triplex. And the reason that there's a difference there is that most times when people buy a duplex or a triplex, it's because they want to have a unit that they live in. So it kind of throws off the whole cash flow perspective because it's usually valued in a different way. So that's high level what commercial real estate is. Why is it interesting? Why should you all care about it here? So first of all, it's a massive industry. It's $7 trillion industry. So I think you can appreciate how big that is, and it really shapes the way the cities grow and function. I think what's really enticing about it for people at your stage to think about, obviously you're coming out of college, is that you can make a lot of money. The income potential here is really high, and it's really based on performance, not seniority. And I'll get to some of the sales sides of it, but the sales side of it in a little bit. But even as a young person, you could dig up a deal, you could go find something and make a lot of money, right? And that's kind of an outlier. It happens all the time, though. So I think that from your perspective, it's a very enticing to think about in the sense of making money. It's also combines sales, finance, strategy, and negotiation. So it's very dynamic. It's very fast paced. I knew I was going to do this. I'm sorry, guys. I'll be better about it. Yeah. So it combines sales, finance, strategy, and negotiation. So again, very dynamic. It's also you're working with business owners. You're working with investors, right? You think people that are running pension funds, endowments, and then also with decision makers. And again, I'll explain how this all fits in a bit. But decision makers like CFOs and CEOs. So you're working with very driven, ambitious, smart people, and so it makes your day-to-day very exciting. It's also a really fun industry. The people that work in commercial real estate, it's really not like an industry that most people are used to when you think about this kind of like almost finance type role. It's very friendly. Even people that are competitors typically get along really well. So it really makes it for a fun industry, and I'm sure Chuck's going to chime in on this in a bit. So yeah, it's one that I've enjoyed very much being part of, and I know Chuck has been as well. And I think at the end of the day, you get to walk past the building that you helped lease or sell or buy and say, I was part of that. It's a tangible asset, right? You can see it, you can feel it. Where unlike finance, where it's just numbers and really at the end of the day, it's just all in the ether. This is a tangible asset that you're able to actually see. All right, I got it. So I'm going to walk you guys through a building ecosystem, right? So every single one of these buildings that you see in the San Francisco skyline falls within this. So just to give you an idea of kind of how robust this industry really is, I'm going to start out. I'll just do it on this guy here. So starting out here with the operator developer. So essentially what this is kind of the quarterback of the deal, right? They're going to put the entire deal together. So when they go and say, hey, we want to buy this deal, what they need to do is they need to come up with the debt and equity to buy the deal. And so you could think of debt as being the loan, right? You're going to go to a bank and say, hey, this is the purchase price. I need a loan. They're going to give it to you based on a loan to value of the building. And then what you need to do is you need to fund the delta between the debt and the purchase price with equity. And equity can be anything from, like I mentioned earlier, endowments and pension funds to family offices to, if you were to say, hey, I want to go buy a small apartment and I need to come up with this equity, I'm going to go pass the hat around to all my friends and family and see who wants to invest in it, right? So that's how you're going to fund the equity piece to this. I'm going to kind of move over to the AM/PM, And what that stands for is asset manager and property manager. And the difference here, and not every building necessarily has both, but I would say most do. An asset manager is really is in control of the strategy of the building, implementing the business plan. So they're going to be any kind of redevelopment work or renovation that needs to happen, anything that has to do with leasing, anything that has to do really with like implementing the business plan, reporting to investors, things like that. Underneath them works a property manager, and the property manager is going to run everything day to day, right? They're going to handle tenant complaints, they're going to deal with billing, they're going to get vendors on board, they're going to just run all the day to day. So it's a lot more like operational versus strategy is how you can kind of separate the two. Below that, the service providers, you could think of these as your attorneys, your accountants. They work on the building, but they're not necessarily hired by the building directly. Again, think contractors, architects, engineers. There's a whole slew of people that end up working on a certain building. Going down below that is leasing, and these people are just what it sounds like. They're responsible for leasing up the building. And this is really prevalent in all four of the categories, right? Anytime you have a vacancy, you're going to need someone to lease that space up. And then over to the right, you have capital markets. And what the capital markets teams typically do is that it's twofold. One is they're going to either help people who, operators, developers that are looking to buy buildings, and they say, hey, we need to go find a loan. They'll go out to the loan markets and they'll basically run an entire process to get you, a very competitive process, to get you the best loan terms possible so that you can implement that loan when you buy the building. The equity piece to that is not as common, but a lot of times the people will say, hey, I've had this beautiful building, I want to buy it, I don't have the equity lined up, can you also help me place equity? And so part of the capital markets is basically a debt and equity placement team that works through that. The other side of it is investment sales, and these are the folks that will go and sell your building for you or help you buy a building. And the reason that those are both in red, you'll see in a minute, but these are really the sales roles within commercial real estate that I want us to focus on here today. So, sales careers in commercial real estate. Like I said, it's leasing and investment sales. And these are just high level. I'm going to get to them a little bit more in detail here in a second. But leasing is really broken down into two categories. You're either representing a tenant or you're representing a landlord. And think here of just the role itself is really a consultant and a negotiator. And again, I'll get into this a little bit more, but you can kind of think of that for right now. Investment sales, there's different investment sales brokers for different product types. So every one of those I said, and then you go out and it's actually geographically focused too. So you might have an office investment sales broker in San Francisco. You might have one in Silicon Valley, the East Bay. There's some that go all over, but there's a lot of different ways that you can kind of find your niche within the investment sales market. Both of them are very sales driven. You hunt for deals, you build relationships, and you get paid on performance. Some of the must-knows as part of these careers is you need to know market statistics. Data is king here. This is going to be one of those areas where you really need to understand what's happening in the market, whether it's vacancy rates, whether it's comps in the market, what's happening with tenant demand, what's happening with interest rates. There's so much data out there, so being able to collect it, consolidate it, and then deliver it to your clients is absolutely key. You need to know the players and the assets. Like I mentioned, this is a very geographically focused business. So you need to know everyone and everything in your market. You need to know what's happening everywhere, right? So that everything is happening within your market. So you need to know who owns buildings, who the tenants are in your market, and you need to know all the assets. You need to be able to take your tenant around and say, this building is, the address is this guy owns it, or this person owns it. These are the lease rates that are happening. Here's the vacancy rate. You really need to know all of these stats, and it goes back to market statistics, but that's very key. I can't see it on this one, but the tenant needs is also very important, and this goes both sides. If you're a tenant rep broker, you need to know what your tenant needs, right? You need to say, okay, you have an employee count now, but you are in hyper growth mode. So what does your growth look like over the next 5 years? And how can we facilitate that or strategize around what we're going to do with your office space if you grow out of it, right? So there's a lot of discussions that happen around what do the tenants need now. It also might be, hey, here's where all my tenants live around the area, and here's their typical commute pattern. if we move here, what does that do to the commute for these employees and these employees? So a lot of it is just like, where do you want to focus, not only in terms of size, but also in location. Lease structures and fundamentals. I'm not going to go too much into this because it just gets really granular. So but there are different types, and it's important to know. And then lastly, you need to know how to negotiate and strategize. Again, you're going to be negotiating against people who are very smart, and you're in the middle of people who are CFO and CEO and people that own large institutional assets. So you need to know how to handle yourself in those kind of negotiations. Lastly, I think what's really interesting about the sales in commercial real estate is that as you start to get into these deals, you realize that there's going to be opportunities to invest in deals. So you're going to start to meet people, and you're going to build your network of people that you know within the industry. And someone's going to say, "Hey, I'm putting together a deal, and I'm going to pass the hat around, and I'm investing in this deal. Do you want to get in on it?" And we'll touch on this more later, I'm sure, but I think that is one of the most attractive parts about being on the sales side, is that you want to have equity ownership in buildings, because that's how you make money. That's the way that it works here. So you're going to make a lot of money doing the sales and leasing side, but at the end of the day, you really want the equity piece. And so a lot of times it's an opportunity through investment, sometimes less so, but there are times when someone will say, "Hey, you found us this off-market deal. We're not going to pay you a commission. We'll just give you some equity in the deal." And so you get essentially sweat equity in the deal. And the two pictures here I just put up, but these are actually live deals that are out in the market right now. The top right is an investment sales. This is being sold. It's a 1 million square foot campus in Stanford Research Park in Palo Alto. And you could just get an idea of it's a lot of marketing, right? And I'll get into more how that all works. And the below slide, our picture, is a leasing brochure that is just kind of highlights the attributes of a building, and you get an idea of kind of what the vibe is there. Okay, so leasing. So the term here is broker, right? So when you're doing leasing, you're really a broker, and you're either leasing space for a tenant on behalf of a tenant, or you're a landlord rep, and you're representing the landlord negotiating with a tenant. To kind of walk you through how a typical sales cycle would work here, the first thing is you got to find the tenant or the owner, and that's going to be the most difficult part, right? It's going to be cold calling, networking, referrals. These are all really integral to finding these people. A lot of times what starts out as prospecting and cold calling will quickly turn into referrals, because the CFO will say, "Hey, you got to use this broker because he did really well in ours," or you can use and leverage the experience you've had on other companies. Say, "Hey, I represented this company and they're a competitor," and say, "Well, if they represented them, I need that guy to represent me, or that woman to represent me." So it is, I'd say the referral is where you kind of want to lead into, but it's definitely up front going to be a prospecting, cold calling, networking type deal. Collecting and sharing data. Again, this is collecting those data points from your tenant. Where do you want to be? What kind of space do you need? What are the market statistics? What are the comps in the market? What are the availabilities? You're going to need to know all of that. You need to package it together and present it to your client. With that, you're going to generate a list of availabilities in the market, and you're going to say, "Here's what we're going to go tour." And you go around to all the different buildings, you tour through all of them, you kind of short list 2, 3. I mean, maybe there's one that stands out, but you want to negotiate. So you want to try to leverage a couple different landlords and kind of against each other. And then with that, you would say, with these 3, we're going to submit an LOI, which is a letter of interest, a letter of intent. And from there, you negotiate that, which is non-binding. But then once it goes to a lease negotiation, then it turns into a binding lease. And just so you have an idea of the kind of money that a leasing agent can make on these kind of deals, this is the deal we have in downtown San Mateo. It's 30,000 square feet. On this, we'd be paying a $30 per square foot commission. And of that, 60% goes to you, 40% goes to the house. And on this, after the split, you'd be making $540,000 on one deal. And on the listing side, it would be about half that. So this, we're not going to go into a lot of detail on this, just because it's just more for show. But I just wanted to give you an idea of kind of what some of the leasing statistics are in the market. You have vacancy rate, net absorption, which is how much space is being leased every year versus how much is being put on the market. What's under construction? What are the asking rates? And then the the comp that says Newmark on it, that's essentially what you would be you would be providing to your landlord or your tenant, saying, hey, here's what I think we could get because this space leased for this in another market or another building. So moving on to investment sales, a building is a business. So what you're essentially doing as an investment sales broker is you're selling the future cash flow, the location value, and the investment story. The salespeople, you're helping decisions like, is this $10 million apartment building a good buy and why? So it's analytical, but you also have to be able to craft a story behind it. What's the return if we hold it for 5 years? And should we renovate it and increase rents? Should we put a bunch of money in and try to get it leased quicker at a higher rate, but we have more risk in the deal because we've invested more money? Or should we sit back and maybe it takes longer to lease and we do it for a lower lease rate, but we don't have to put the money into it, right? These are the kind of decisions you're going to have to help these building owners make. So in terms of the sales cycle here, finding a seller is paramount. You can represent a buyer. It doesn't always work because a lot of sellers don't actually pay a buy-side commission. So the buyer has to pay the commission. So it's like adding on the commission to the purchase price. So it's not always the real deal. A lot of times you have to actually get in and get a contract signed with the seller. So it's really the same avenues as leasing. You're prospecting, you're networking, you're getting referrals, and again, it's the same thing. You're going to be doing a lot of cold calling right off the bat. You get into a place where you're starting to do deals and execute on deals. People take notice. You use that as leverage. Then you go and get new deals. So it gets easier, but it's at the beginning, it's going to be a lot of cold calling and networking. You're going to underwrite a deal, running the financials, and I'll show you an example of this here in a minute. You package and pitch, which is just creating a marketing package. And a lot of this actually is marketing, right? A lot of these teams have marketing people on their teams say, you need to make the package look beautiful. It needs to have great pictures. It needs to have, the wording needs to be put in a way that makes it attractive to someone. So this part is really important. Once you get the package and you pitch the business, you're then going to go out to the market and send it out to everyone that you think might be a potential buyer. You then start fielding calls, you start selling the deal to these buyers. And then at that point, you start doing tours, you start taking in offers, and then the idea is then, again, negotiate and close. And on this deal, this is actually a deal that's on the market right now in Union Square of San Francisco for $16 million. The commission on this would be 2.5%. After your 60% take, it would be a $240,000 commission. So again, you can get an idea of the kind of money that gets made on these deals. So this is a live deal that we're actually looking at right now in San Francisco. This is in Cow Hollow, if you know it. It's kind of by the marina. And I'll just kind of walk you through some of this very high level. I mean, I could literally teach an entire semester course on just this analytical side to it. So it's just very, very high level for the time being. And with multifamily, it's a lot easier. As you start to get to more institutional office, the deal metrics and underwriting become a lot more robust. But essentially what you have here is operating data under that section is income and expenses. This is all property level income and expenses. When you have your income, you subtract out your expenses, that gets you to your net operating income. A lot of the valuations are tied to your net operating income. However, below that, below the property level expenses, you're gonna have entity expenses, legal, attorneys, things like that. And then below that, you have your debt. So once you essentially are able to pay off all of those expenses, what do you have at the end of each day that you can distribute out to your investors? That's the idea here. So in the red square here, these are kind of the three main return metrics that we look at it from a multifamily basis. The first being a cap rate, and really what the cap rate is your NOI divided by your purchase price. And it's really used as a benchmark. Think of it as a comp. Think about when you look at a house, or you're looking at certain things like, oh, this trades for this, $250 per square foot, or whatever that is. This is a way for people to look at a deal and determine whether or not it's a good deal based on what else is traded in the market. So I might look at this and say, oh, this is a 5.12 cap. Well, the deal down the street that looked very similar to this was a 4.75 cap, which is obviously a lesser return. This now looks a lot more attractive, right? So that's the idea, is you start to look at this, and then from the brokerage side, they're gonna look at it and say, they're gonna essentially use those market cap rates to back into the price that they think it's gonna sell for based on these returns. So the current here is 5.12. Pro forma really is just, the current is 5.12, which means that's what's in place now. The pro forma is going to be, if you were to roll all of these tenants over, or what we call mark to market, all of these rents, here's what you could expect your return to look like. The GRM is gross rent multiplier, and this is your purchase price divided by your gross scheduled rents at the top right. And again, same kind of deal there. And then the cash on cash return is a bit different. This is more from an investor perspective of looking at what's your distributable cash flow, and then on an annual basis, and then you divide that by your equity in the deal. So it's really a return on equity, and this is just industry jargon, really, at the end of the day. So this all sounds great, but there's a lot of headwinds in the commercial real estate market that I would be remiss not to tell you about if you haven't read them already. But the first, and this really applies mostly to office. There's some other industries, but really I would say this applies to office, is the structural change that happened to the office workplace through COVID. And it's not returned to what it was. And if you look at the graph there, you can see in 2019 where it went, where it was from, and then where it dropped to. We're still at about 55% of the usage that we were at before COVID in San Francisco. We're below nationwide. Silicon Valley's better, New York's better, Miami's better, San Francisco's struggling. The upside is that there are a lot of things that are happening in terms of the federal government getting people back to the office. The local government, San Francisco, is calling their employees back to the office. You have Salesforce, you have JP Morgan. There's a number of large corporations that are all following suit. A lot of this, to me, from my opinion, is leverage based. Before all of this happened, especially after COVID, the employers held the cards, or excuse me, the employees held the cards. They could say, hey, I could go out and get 3 or 4 job offers anywhere I want. If you tell me to go back to the office, I'm out of here. So a lot of the employers had to say, okay, let's just take it easy. There'll be a time. I think once you start to see the unemployment rate go up, that the employers, the leverage kind of switches there, and I think the employers are going to start calling more people back. That's my personal opinion, and it's not materialized yet, but it's I don't think we're ever going to get back to where we were, to be honest, but I think it's going to be closer than where we are today. So interest rates, I think all you may or may not know, but hopefully you do, that the Fed has raised interest rates significantly to combat inflation. This is pretty devastating to the commercial real estate market because a lot of the profit in a deal is tied to your debt. If your interest payments go up, that's less cash flow you're making. So it actually dings the value of your building. And so this has been tough in the market, and I'll get into a little bit why that is here in a second. But it's interest rates need to come down, I think, before you're going to see meaningful change in terms of momentum going back up. But we are starting to see that to some degree. There's a lot of uncertainty right now. With that, though, is the tightening of credit and lending standards. The banks now are just at a point where a lot of them have their balance sheet kind of wrecked by a lot of these deals that are underwater. So they're being very, very selective about who they lend to. And so that's just making it more difficult for someone to go buy a building, because if you can't get the debt to buy a building, you can't buy the building. So that has definitely slowed sales activity. That is starting to pick back up, though, for sure. Not quite what it was, but it is starting to pick back up. Construction and labor cost is a big problem in California, huger problem, I think, in the Bay Area. But anytime that the labor and construction costs go up, especially if the tariffs, everything around the tariffs is going to ultimately increase this as well. But it's going to make development much harder, or any kind of substantial renovation much harder, because your construction costs are going to go up, and if your rents aren't going up with it, your returns are ultimately going to drop. So it's a problem, but it's kind of yet to be seen how the tariffs impact that. There's been a significant bid-ask spread, and what that really means, and just give you an example, is if you were a building owner in 2019, you got your building valued at $10 million, you think, okay, great, my building's worth $10 million. Literally a year later, you say, I need to get out of this building, sell it, and they go, great, it's worth $6 million. And you go, whoa, right? So what's happening is that the number that a lot of these owners have in their head, they weren't able to wrap their head around the fact that the value of their buildings had dropped so significantly. So because they weren't willing to drop that low, the spread, or the difference between where they were willing to sell at and when someone was willing to bid at, was too great. And so the deals weren't happening, and there was a lot of uncertainty in the market because of it. Deal activity kind of slowed down because of it. And all of these are just led to market caution. A lot of the decision makers have realized, hey, if we don't have to sell or we don't have to lease a building right now, let's just wait. There's no urgency. Where if you looked at it in 2018, 2019, it was just everything was let's go. And so it was just really fast paced. Things have just started to slow down. Every deal takes a little bit longer to get through. Okay, so for all of you sitting in the room, how do you break in? I would say the first and foremost is the ultimate break-in here would be to get an internship at a brokerage firm. And I'm going to put Newmark, CBRE up there. There's a number of different ones, Colliers, JLL. There's a bunch of them, but getting an intern at one of these places would be, in my opinion, your first step. What you would likely do is get put into a market research department, and you would be basically collecting and distributing the data that I was showing you. You'd be responsible for that, but in turn, you would be learning a ton about what's happening with those statistics, how it works, what's going on in the market, because you would essentially be running the whole program. From there, you would then get put onto a team or work under someone in a runnership program. But again, I think this would be your quickest, most efficient way of getting into the industry. With that, I mean, if you don't know anyone at these firms outside of just cold calling them and saying, hey, do you guys have an open position, networking with alumni, networking with other students, because at the end of the day, that's what Chico's great for, right? It's just making sure you're always networking with people, because you never know where this leads. Joining a real estate network or attending industry events. I belong to NAOP, so I'm going to recommend them first, because it's a great program, but it's a nationwide real estate program for all different industry types and sectors. And essentially, if you go online, they have industry events, they have classes, they have workshops. You can learn how to underwrite deals, you can learn how to do lease structures. There's a whole like student side to it. So I think that's a really key thing, because if you want to learn, but you also want to network, joining something like this makes sense. It is expensive, I will say that, but there are kind of free versions of it, if you will. Learning on your own is key. I mean, I still do this all the time, right? It doesn't stop. It's not just because you're young, you just say, hey, I got to learn a few things real quick and then be done with it. Lifelong learning, right? It's key to it. So whether it's taking classes through a NAOP or reading, podcasts, there's no shortage of information out there to help you become better at what you do. I'm going to recommend, if anyone here is interested in real estate, to buy The Real Estate Game. The author of this was my old boss's professor at Harvard Business School, and it's a really intuitive way of looking at the real estate industry, but more probably from an investment standpoint. But at the end of the day, you're going to need to know how that all works, whether or not you're on the leasing side or the investment sales side. You need to get your real estate license. It's mandatory. But I will say that about, 10 or 15% of what you actually learn from the real estate test applies to commercial. It's mostly geared towards residential, so don't bank on learning a lot from it, but it is necessary. And then one of the other things I would make sure you figure out is you need to determine what market you want to work in. It's very sticky. The geographic, it's very geographically focused. So you can't say, hey, I'm going to move to San Francisco for a couple of years, start in brokerage, and then move back home to wherever. Because yes, some of the skills are transferable, but you'd essentially have to learn everything back over again. All the market statistics, all the players, all the assets, all that gets wiped away. So you want to make sure that where you're going is going to be where you're going to stay long term. And I would say, along with that, is making sure that wherever you go, it's like, where do you have the most connections, right? Because those are the network of people that you're going to meet and work with are going to be key to this. So making sure it's somewhere that you have some kind of in there. And then finally, if you're looking to get more on the principal side, which is the building ownership side, I would recommend an MRED, which is a Master's of Real Estate Development. This isn't necessary if you're going to do brokerage per se. It would help, definitely. But I mean, I know USC has a really good MRED program. It's just a master's. It's not an MBA, but it's just geared specifically towards basically the ownership side. Okay, what does it take to succeed here? So this is a high performance career and your earnings reflect your effort and your skills. So what does it take? Hustle, big time. It's number one. I mean, it's cold calling, it's networking, it's late nights, it's working hard to build your network. And it's not, hey, I do this for 6 months and expect, I mean, this is a multi-year type thing. So, at the end of the rainbow though, there's a big pot of gold. So you gotta make sure that it's worth it for you, but it is gonna take a lot of hustle in the meantime. Market knowledge, I already kind of went through that. sales chops. I think you all understand, and hopefully you're learning from Tom how this all works. But it's building trust, handling objections, negotiating, closing. Those are all key parts to the industry. Financial literacy. You need to know how to value deals, model returns, and this is definitely more prevalent on the investment side. But even on the leasing side, you need to know how your lease is going to impact the owner's returns. So understanding how it works is key. I mean, it's the building blocks for the commercial real estate industry. And lastly, it's discipline. You're going to be running your own book of business. This is not a typical sales deal where you have a manager saying, hey, you have to hit quota every month or you have to hit quota every quarter. You have a manager, he's going to come to you once a year and say, how does your pipeline look, all that. So it's very easy to just say, hey, I can kind of do what I want. And if you're not disciplined about how you're doing it, unfortunately, that's how careers go south. So discipline is definitely key. And the income potential, I mean, you saw with those kind of commissions. I would say this is probably more of a realistic snapshot here, where as your first few years are going to be pretty modest, unless you find one of those deals and you're able to cold call the right person, you get that outlier deal, close a big deal. That's wonderful. But I would expect something more in line with what I put up here. And then the second being, your mid-career, you should be, and I almost put this at a minimum. You should be making between, $150,000 to $500,000. If you're not at that point, it's probably time to start looking at another industry. And then the top brokers are clearing well over $1 million, in some cases, lots more. So it's like I said, it's a lot of work. It's a lot of hustle. There's a lot of work to it, but there's a lot of money to be made if you're interested in pursuing that. So, with that, let's bring up Chuck. We're going to do a little panel with Chuck.
First of all, I love Chico. I mean, I just love this place. I mean, every time I come here, I love it. And I'm really, really proud of all you and very appreciative. And Tom and his staff, and Jim before, have just done a wonderful job, well exceeded anything I could possibly imagine when I got involved. So I want to thank you all for that. Let me just make a comment. I mean, to use a bad analogy, Luke was patient zero for the Seufferlein sales program before there was a Seufferlein sales program. And I thought he did really well. So I am taking credit for it. So where do we start?
All right. Well, why don't you just walk them through your career, high level? What have you been up to?
After I got my master's degree from Santa Clara, I went to work for CBRE, and I went to work as a market research person for about a year and a half. And then I was fortunate enough to run or intern for one of the legends of the Silicon Valley brokerage business, Dennis Chambers. And I loved the business for a lot of reasons, and I did that. I did it for a lot of reasons, but I'll talk about that in a minute. From there, I did it for about 10 years, and the one thing that kind of got to me is every January 1st, you start over, right? And you could have a great year, and then on January 1st, you're sitting in your cubicle and kind of going, oh, now what do I do? Because it's commission only. And I did it for about 10 years, and I was literally getting to the point where I was a little tired of that. And ironically, at the same time, my best client, which was the Samus company, an Irvine-based development company, offered me a job to be the president of Northern California for their development company. So I took that, did it for about 7 years, and then there was a pretty significant recession. So I went back into the brokerage business, but on the management side. And I managed the Silicon Valley office for CBRE, and then I became a partner and president and CEO of Cornish & Carey, which is now Newmark, and did that until, well, I'm still, I guess, doing it. We sold the company to Newmark about 10 years ago. And along the way, as Luke spoke, I always used the brokerage business as a means to the end, and the end to me was to own real estate and be a part of something. And I used it and it's not to say that brokerage isn't a lifetime career. Believe me, half of my sales guys have been doing it, forever and ever and making tons of money. So you can do both. And along the way, I had a development company called Cap Associates, And then Luke and I started Cal Capital, and the Cal stands for Chuck and Luke, if you're wondering. It wasn't California. And so that's basically what I've been doing, and it's over my career, over the 50 years. 50 years. I have been involved in 5 or 6 million square feet of development in the Silicon Valley, and own lots of different pieces of real estate, and have just enjoyed every step of it. So,
awesome. Why don't you tell them about how you got into real estate?
Okay, so if you heard the story, I apologize, but it really is important to understand why I'm here in commercial real estate. When I was going to Chico, it actually dates back to when I was 15 years old and got in a horrific motorcycle accident. And on my 20th birthday, my sophomore year up here, I got a check for $5,000, which at the time was big money. And I remember wondering
from the motorcycle accident.
From the motorcycle, yeah, it was a settlement from the motorcycle accident. And so my dad sends the check up, and I'm driving around Chico thinking, oh my God, I can go buy a Harley, I can buy a Corvette, I can take all my buddies to Reno and get go crazy. And as I was driving down Arcadia, actually it was West Sacramento and Arcadia, I drove by this house, and the for sale sign was Ginner and Brown. I don't know if they're still around. And when it's Carl Anderson, I'll never forget. So when I got back to my house, I called Carl. I thought to myself, geez, I might be able to buy a house. Now this story is going to affirm that I'm the oldest guy on campus, no question. But when I talked about the prices. So anyway, I got back to the house. I called Carl. We met at the house. The house was for sale for $25,000. And you probably notice it's the blue shingle building right across from Chico High School. It's Arcadia in West Sacramento. So my dad had to sign for co-sign or sign for the loan, but the loan payments were $165 a month, and I had leased out the 3 bedrooms. I turned the garage into my bedroom. I leased out the 3 bedrooms to my fraternity brothers for $100 a month each. So I was cash flowing. It was a big deal. And then that summer, President Nixon, and for those of you who don't know who he was our 37th president in 1969. He lifted a wage price freeze that was on because inflation was running rampant. And so I went down to Lassen Savings Loan. I refinanced the house, pulled out, I think, $8,000 or $10,000, and I bought 2 more. And then I did the same thing the next summer, so that when I left Chico, I owned 6 houses and then went to work in commercial real estate. How I got to that end is after I got my master's degree, I went to a career counselor. I told him my story, and he said, "You got investment properties?" And I said, "Yeah, they're all cash flowing. They're all leased to fraternity brothers and getting trashed all year long, and I have to fix them up every summer. But they're cash flowing. It's a great investment." So he's the one that said you should go into commercial real estate, and I had no idea what it was. So that's when I started interviewing and got hired at CBRE, and that's where I've been since.
So what is it about the commercial real estate industry that you find the most appealing?
I think it's 2 things. It's you're running your own business. Literally, as Luke suggested, you're running your own business. You can do whatever you want. You can work as hard as you want. But I remember coming home a week after I was at CBRE, and I told my wife, I feel like I just joined another fraternity. There were 40 people in our office, and they were young, aggressive, competitive, play hard, work hard, play hard kind of people. We ended up raising our kids together. We ended up, vacationing together. I just loved the people in the business. And I also loved the thought of forcing myself into a situation where I would be dealing with CEOs and CFOs, because I just didn't think, that would be something I'd be able to do. So you're sitting in a conference room across from a CEO. You really need to know your stuff. And so I think in general, it was sort of the people and the excitement of, what you can create. And like, as you said, driving around the Silicon Valley, you can say, I was a part of this, I was a part of that. That was what it felt.
What advice would you give to young people looking to get into the market or into the industry?
It's different now. It's still a wonderful business. And I think that, as Luke suggested, all the points that he made, I think, are on line with what I would say. But you really have to you really have to focus and make sure that you want to do it, because you are going to bury yourself in gathering information, learning about, the place you work. I mean, there's no place on earth like the Silicon Valley. You all know that, and especially for commercial real estate. I did a presentation up here about 15 years ago where I used aerial photographs to show what the Silicon Valley is today versus was, in the 70s. And a lot of people don't like the idea of, tearing down orchards and all that good stuff, and I don't blame them, but it's phenomenal what's happened in Silicon Valley because of the campuses for Apple and Google and everyone else involved. It's just phenomenal. But I would say I was lucky enough to be in the Silicon Valley before it was called the Silicon Valley, believe it or not, and watch and be a part of the growth. We were having companies like at the time Fairchild, Varian, HP, Intel coming to us and saying we need a campus down in San Jose, and we would sell them 30 acres. They'd build 200,000 or 300,000 square feet, and that's what started the Silicon Valley. Because before that, it was all up at Stanford Research Park, right outside of Stanford. So again, I guess what I would say is you just have to be really committed, know you want to do it, and get excited about the prospects, because what's possibly there for you is unbelievable. I have to just tell you one story. You're talking about commissions, and I know I don't like to throw numbers around, but this was a phenomenal one for me. One of my best friends, Phil Mahoney, he represented this developer, and he was trying to lease 1 million square feet in Moffett Park. He leased it to Google at high market rents, 15-year lease. The term of the lease and the market rate is what determines your commission. So I'm sitting in my office running the show there, and all of a sudden I get this invoice or this sheet that says I have to sign it so we can bill these guys. The commission was $36 million. One deal, $36 million. And it was the highest one I've ever seen. And I just thought to myself, life is good. This is amazing. Who does this kind of stuff? And Phil has averaged, I would say, over the last 10 years, $10 million a year. And he's a leasing broker. I mean, he's a Stanford puke too, so I'm not particularly crazy about that. But what I loved about Chico, we ended up on our payroll, or brokers in our office, out of 300 brokers, I think we still have around almost 10% that graduated from Chico. Now that obviously comes from a bias, but it's a good one because you guys know how to build relationships. It's a social school, and as Tom suggested, teachers, everyone else are involved in it. It's just a wonderful little place in the universe where everybody just has a great time and knows how to build relationships and get along with everybody. So I was always keyed to that, and so far it's turned out wonderful for us. So,
what are some of the characteristics that you see the best brokers share?
Just competitiveness. It's a very competitive business, but what you find, we did an ad once in the San Jose Mercury where we highlighted all the D1 athletes that we had working for us. And I think there was something like 32 or 35 guys played, soccer, football, everything else. A couple of them professional. And I only say that because you don't have to be an athlete to do this, but I think it puts in perspective what it takes. You have to really get in there ready to throw some elbows and do what you need to do to win the business. And you don't just win it one way or another. It's a combination of things leading up to it. You have to understand the company you're going to work for or try to work for. And I would just say that it's a stick-to-itiveness, it's a competitiveness, by and large.
Awesome. Well, that's it. Anyone have questions?
Well, we do. Yeah, thank you.
It's funny because when I look back at what I did in brokerage, I wouldn't say I was necessarily as successful in brokerage as I was when I was at Rubicon on the principal side. But it's hard to say I would go back and do anything because what I did at Newmark ultimately led to me working at Rubicon. So it's always hard to things happen and they happen the way they happen. So it ultimately leads to where you are. So I don't necessarily. I'm not sure I would say I would do anything different. I would say. Yeah, I'm not sure I have the.
Yeah, I think it's going to sound boastful or egotistical, but I don't think I would change anything. I mean, the stars lined up. I mean, I went to work down in Silicon Valley, and again, it was not called. I mean, they coined the phrase Silicon Valley, I think, in the late '70s or early '80s, and I was selling truck terminals. That was what I did as a broker, because it didn't explode. But when it exploded, I was there. I'd worked for the very best, and I worked for the best company. And along the way, what I would do with these houses up here, my partner, my mentor, Dennis Chambers, he was putting together LLCs, and he was buying small industrial buildings and office buildings and things like that. And he would go around to people in the office and say, hey, if you want to put 10 grand, 20 grand into this thing, well, you can be in the LLC. So I would call my broker, and we'd sell a house, and I would use that money. I'd give it to Dennis. And so as it turned out, I converted these 6 houses into ownership interests in 6 buildings back in the 70s, 80s. And so I just don't know. I don't think I would have a lot to be changing.
I actually, now that I've thought about it, I think I would have done is I would have invested in more buildings while I was at Rubicon. I think I was, it's easier said than done because I was working so hard there. I didn't have a lot of time to do it. But I think once I left Rubicon to do my own thing, it would have been nice to have some buildings that I'd already invested in versus starting back at kind of square one. And that just goes back to what I was saying earlier about just the opportunity to invest in deals and be part of deals, I think is huge no matter where you are in your career, because eventually you're going to get to a point in your brokerage career. And another guy that I work with, Ben, who does incredibly well, he's at the same point. He's just like, I'm 50 years old, and I just don't really want to. I want to kind of there needs to be a means to an end here. And although he does well, he wants to invest in buildings, right? And he didn't really get a chance to do that as much before. So I think the whole idea of getting ownership interest in deals earlier than later would be something that I would consider being really important.
I'm sorry. It took 5-10 years. I don't remember exactly, but it was a culmination of different things. I was some big commissions. I was making lots of commissions when I was at CBRE. I think I was number 9 nationwide one year and number 7 the other year. And at the time you didn't know. A lot of people just you earn your commission, you go buy a new Mercedes, right? And what I would do every year is I would decide how much of what I made I'm going to put into buildings and buy more real estate. And so that's by and large what I did. And over a period of time, I surprised myself. I mean, I looked at my balance sheet, my net worth, and I went, wow, something good just happened. So
I was 29. I'll handle this one. I think when I started, and definitely when he was starting out, is that commercial real estate was a very archaic industry, and you're seeing a lot of prop tech. You've probably heard of that expression, and that's also a wonderful industry to get. If you enjoy the idea of what we're talking about here, but you want to be on the tech side, the prop tech, there's a lot of new technologies coming out that are revolving around property, whether it's residential or commercial. So that is also another interesting vertical. But I would say that today, what I didn't have when I started in 2009 was the technology piece. There is so much technology. I mean, even AI. I mean, let's be real. It's so much more efficient now to be able to run your business. There's so many more search tools to be able to find owners and be able to get contact information for people that are decision makers. There's just so much more technology out there, and it's all consolidated a lot easier. And so I think that going back, or what you would have as an advantage over what we did, is the technology piece, no question.
Yeah, I would just say I'd probably start a real estate investment company, and what I learned while I was a broker and I started Cap Associates, you have to have an infrastructure, and you have to have engineer, you have to have the right architect, the right CPA, and if you've got all those guys lined up, you're not paying them until you have a deal, but when someone brings you a piece of real estate and says, here it is, you got 30 days to tell us whether you want to buy it or not, if you're all set up with this infrastructure, it makes it a lot easier, and it makes it very efficient. And so I did that already, and that's probably what I would do today, but in a grander form. And the other part of that equation is raising money. And I used to have an investor list, and at one point it got to 350 people that I knew if I called them and gave them a prospectus and said, this is what I'm going to do, they would invest. So I think the two kind of would enable me today to start a new company, a much bigger company, because I'd have more institutional investors, and that's probably what I would do. So, take all my fraternity brothers to Reno. $10,000 to build an empire? Well,
At least start.
yeah, again,
Not going to get you very far.
well, yeah, no. Same thing I've just said. I mean, forming LLCs is much easier than you think it is, or you might think it is. And when you get it's called a promote. So if on all the LLCs that I'm involved in, I get a promote, which means since I found the deal and organized the deal and put the deal together, I get, say, 20%, 30%. And then the investors get the balance. They get 70%. So I guess what I would try to do with $10,000 is just form a simple LLC, try to get, 10 more investors, 15 more investors with that 10 grand. And I'd go buy what Luke showed on the, some fourplexes, sixplexes, eightplexes in a market which is somewhat suppressed, which right now is San Francisco. And there was just an article that Luke sent me that all the billionaires are starting to invest in San Francisco again because they recognize that it's really at a low point. So that's probably what I would do with it.
Yeah, like I mentioned, 10,000 isn't a whole lot in terms of actually buying a building or buying real estate. I would say using that to network is probably how I would use it. It's going out and joining an NAOP, go out and taking people that you meet that are prospective investors or clients, and using that money to get to know them and build that network, because that's going to be probably the best use of that money.
Go ahead, Luke. You've made a bunch more than I have.
Yeah, sure. It's funny because the one of the biggest mistakes I ever made that almost gave me a panic attack was when I had just started at Rubicon. I think I was a year in, and I was an analyst, and we were running this deal, and I was working on 3 or 4 different deals. I was the only analyst, and so I was just rushing through things, and I ended up completely screwing up in underwriting. And luckily, we didn't go forward with the deal, but we were in a position where we might have had to buy it, and I would have had to go to my bosses and say, actually, the return's not this, it's this. And I would talk about like breaking out into a cold sweat and feeling like you're going to be sick. I mean, it was that bad, but it was one of those mistakes that you make once. Because it's like, and so again, it's kind of hard to say, I wish I didn't make it. Sure, of course. But it was one of the biggest teaching lessons in my life, because I definitely never, I made sure that every number was buttoned up thereafter, because, when you're talking about buying deals that are 50, 60, $100 million, just one fat thumb on an Excel spreadsheet can literally ruin the deal and get you fired. So you have to be very, very detail oriented. And that was just a lesson that I learned from that experience. Thank God that it didn't get to that point. But yeah, that was definitely a lesson learned.
My Lee Samus, the guy who started the Samus company, he used to tell me to go down to, this is again back in the 80s, he used to tell me to go down to Caltrans and find out where all the next interchanges are going to be and buy as much land as you can around it. And that sounds simple, it may even sound silly, but I went up and down the 80 corridor from Bearfield, Backville to Sacramento, and at the time there was still 2 or 3 major interchanges to be built. And I remember suggesting to my partners that we that we buy, I don't know, it was 60 acres. This farmer, it was an option. So we optioned this land. We put a lot of money into it, and as it turned out, the interchange never got built. So we owned 60 acres worth little or nothing. And I remember, like Luke suggests, I remember I was a young partner, and I just felt I was mortified and apologetic, and I couldn't, but something like that comes to mind, I guess.
Plan your work and work your plan.
Yeah. That's an inside joke, Gene.
That's his advice. That's a good one.
best advice that I would give you or someone, or I'm sorry, rephrase.
Just college students here, like, what's the best piece of advice that you've learned just starting your career, being in the industry, something that you learned along the way?
Yeah, I think it's just, as I suggested earlier, I think it's just making 100% commitment to this or any other job you're going to take. This isn't that unique, but I would advise that somebody that came to me and said, I want to do this, I would just say, you got to be all in. Because I used to work for this guy, and I had to be in the office at 7. I couldn't leave before 8 o'clock at night, and that's a true story. And if I did, I had Warrior season tickets back in the 70s, and I remember Dr. J or something was coming to town, and I said, Dennis, the game starts at 7:30. He goes, well, get there at halftime. You know, I mean, he was that disciplined, and it changed my life because I became the most disciplined person that I knew, and before that I certainly was not. So I would just say, get ready to get after it, so to speak.
Yeah, I was actually going to say, and I put it up there for a reason. The discipline part of it is huge, and I just take this out of real estate. I think as college students getting out of college, anything you do, anywhere you go, being disciplined is paramount. And it's not just about your work ethic. It's also about how you take care of your body, how you take care of your mind. How are you learning? These things almost need to be like robotic in you, right? Because that's how you just need to constantly be growing. There's the growth mindset, right? You don't want to have a fixed mindset. You want to always be growing mentally, physically, spiritually, whatever it is. So I think growing that sense of discipline in your personal life is going to overflow into your professional life, no question. So that to me was when I started to cut, and I probably realized that not too late, but later when I was in my kind of late 20s. And once I did that, it totally changed my trajectory. So everyone's path's going to be different and everyone's disciplines are going to be different. But once you find them, just be disciplined about them and make sure you're doing them constantly.
Lately, I would say there's a couple of them. I bought the land and really put together the whole thing with Barry Swenson Builders, and then Essex Properties. And it's 2 14-story towers of apartments on North 1st Street. They're just spectacular, and I to this day I still drive by. This is only 10 years ago, I still drive by and kind of slow down. I park, I look up at these things. It's pretty cool, probably that one, and probably the first deal I ever did was I helped design and build while I was a broker 60 or 80,000 square feet that we leased to Memorex, which I'm sure is a very popular name with all of you guys. And it was the first deal I did, and it was significant, and that's probably what did it.
So actually one of the buildings I showed up there, 1089 Valencia, was kind of my first deal on my own. And it was kind of like my baby, because I bought other deals, but it wasn't necessarily, there was a partner in it, sweat equity. Yes, it's great to see. But I think once you have your own skin in the game and you really have risk on the line and you feel very, very confident about what you're buying to a point you're like, absolutely, yes, 100%, let's buy this. And then you buy it and you realize you did it, and then you got to kind of just pray that it works out and it hangs on. But after buying that deal, I remember the first time I walked up to it, like that pride of ownership of like, oh my God, that's mine. That was a really cool feeling.
Whatever I say goes.
No, it's a good question. I think when I used to work at Newmark, I worked under him and we worked on deals together there. And then when I was at Rubicon, we worked on deals there together. So like we have this professional relationship that goes back, 15, 17 years. So I think because of that, we were able to separate them, right? And to be honest, I don't think we've ever gotten into a situation really where it's been heated at all. I think, he lets me run day-to-day stuff and trust that I know what I'm doing and trust that it happens. And, big decisions need to be made. I come to him and ask him about it. And I know that he's, a legend within the industry, and I got to respect what he says. And it's, it's just a good partnership in that sense.
And I would say that Luke, I'm as proud as heck of him for sure, but he is much better analyst than I've ever been or ever will be. I'm amazed at how he analyzes property, because it's not easy and you have to do it, sometimes 10 different ways before you buy a building. So on the financial analytical side of it, I just lean on them.
The one I put up, the real estate game, I get that book. I mean, there's no shortages of them, but you know, it's I don't listen to a lot of podcasts in terms of like the commercial real estate side. I would say they're more like lifestyle podcasts, right? I think just trying to think if there's any other books. That's one I would start with for sure. He's a Harvard Business School professor, and it's very intuitive, right? It's supposed to be like, it's like he makes it as if it's a game, right? It's like, okay, you want to talk about a game, here's what it is, and here's the players, and here's the stakes, and so he goes through it. It's just a really intuitive way to learn about, again, more of the investment side of it, more so than the leasing side. I would say it just depends on where you go with this, right? Because if you're going to be a multifamily sales broker, what you're going to learn is going to be so dramatically different from an office leasing broker, even though they're within the same industry. So without you saying, hey, I want to be in this vertical, what should I do to learn in this? Then it's hard to say something that's more blanketed. But I would say that this book is a good start. That's why I recommended it, just because I think it just gets to the root, or the root structure of commercial real estate, which is really, at the end of the day, the financial analysis part of it.